Welcome to this deep dive. We're here to dig into the information stack and really pull out the most important insights just for you. Today, we're putting on our TalkTickers hats, breaking down Infosys' recent Q1 FY26 earnings call. Our job: cut through the noise, find the key numbers, the strategy, what management said, so you're up to speed fast on this major tech services player. We're joined by our expert analyst.
Great to be here. Yeah, this call, it really offers some fascinating insights. You get a sense of how a global leader like Infosys is, well, not just surviving, but actually thriving. They're navigating this really complex global environment, especially with AI taking off and, all the ongoing macro uncertainties. It's quite a story.
Okay, let's unpack this then. Starting with a snapshot, Infosys' Q1 FY26.
Yeah.
My first take. Pretty strong start to their financial year. Looks like market-leading sequential growth. Would you agree?
Absolutely. Infosys really put up some robust numbers. We saw revenue grow, 2.6% sequentially and 3.8% year on year in constant currency. So that strips out the currency fluctuations, gives you the real picture. And what's impressive is this growth was broad-based across their top 5 industry groups, major geographies. Not just one thing, plus really robust large deal wins, $3.8 billion total. They kept the operating margin healthy at 20.8% and generated, this is impressive, $884 million in free cash flow. Those are some serious numbers to start with.
Definitely. So beyond those headline figures, what were the main drivers? What strategic themes really jumped out from the call? What should we be watching?
Well, 2 things immediately stood out for me. First, Infosys's clear leadership in enterprise AI. It's not just hype. And second, their continued success winning those client consolidation deals, where clients shrink their vendor list.
Right.
Management highlighted real traction with these things they call AI agents. They've developed over 300 of them across business, IT operations, helping clients make faster decisions, improve customer experience, boost efficiency. It's deeply embedded.
AI agents, huh? That sounds pretty impactful. Can you give us an example, like one that really shows how they're solving a problem maybe others aren't tackling yet? What does this look like on the ground?
Yeah, good question. The examples they shared were quite concrete. For instance, an oil and gas major using Infosys AI agents for production quality, dynamic pricing, even automated contract management. Imagine the efficiency gains there.
Wow.
Then there's a global manufacturing company using them for supply chain productivity, cost savings, even predicting and resolving equipment issues. A logistics company transforming customer care, operations, finance, all with these AI solutions.
Okay.
They also mentioned working with a North American retailer on frictionless in-store shopping using intelligent automation, edge computing, computer vision. Pretty cutting edge stuff.
Right. Okay.
But maybe the most sort of quantifiable one, a global financial services firm. Their enterprise AI solution using a fine-tuned large language model boosted developer productivity by 25% and automated half of the business requirement creation process.
25%.
Yeah.
And 50% automation. That's huge. It's a real ROI.
Exactly. Huge return.
And it seems this expertise isn't going unnoticed. They got some industry recognition too, right?
That's right. They built on, I think it was 19 leadership ratings last fiscal year, FY25. And Infosys was named a leader in Gartner's first ever generative AI consulting and implementation services quadrant.
The first one.
Yeah. And what's really noteworthy, they were the only large India-based tech services company to get that leader position.
Right.
Really underscores their unique spot in a very crowded market. It's powerful validation.
Given that strong performance, that recognition, how are they looking at the rest of the year? Do they revise their outlook?
They did, but it was subtle. Based on the strong Q1 and their current view, they nudged the FY26 revenue guidance up slightly. It was 0% to 3% growth. Now it's 1% to 3% growth in constant currency.
Okay, so raise the floor a bit.
Exactly. But the operating margin guidance, that stays put at 20% to 22%. It kind of reflects, cautious optimism, acknowledging the good start, but still factoring in those external uncertainties.
Got it. So headlines look good, but the real story is often in the nitty-gritty, the operational details. What did we find when we peeled back the layers on their financials this quarter?
Well, despite all that global uncertainty we mentioned, Infosys did deliver that market-leading sequential growth. That 2.6% number included about 0.4% from acquisitions. So the organic growth was still very solid. Mm-hmm. They also managed a significant cut in third-party costs. Down 60 basis points, that's 0.6% to 7.3% of revenue, shows tight cost control. Mm-hmm. And crucially, sequential growth was also helped by better realization, thanks to progress on Project Maximus. That's their internal program for efficiency, pricing optimization. It shows they're really focused internally on profitability, even with outside pressures.
You're like Project Maximus. We've heard about that before.
Exactly. And volume growth, while maybe not explosive, was definitely positive.
Which sectors and regions really stood out as growth engines for them this quarter?
Manufacturing was a notable one, grew in double digits, and both financial services and URS, that's energy, utilities, resources, and services, they grew above 5% year on year in constant currency. So key areas holding up well.
Geographically?
Geographically, North America grew 2.9% sequentially, constant currency, solid. But Europe, that was the absolute standout, grew a remarkable 12.3% year on year.
12%, wow.
Yeah, more than 3 times the company average. Europe's been a consistent overperformer for them lately.
That European growth is definitely eye-catching. What about margins and cash flow? How do they juggle those given all the moving parts like pay hikes and investments?
Operating margins landed at 20.8%, down just slightly, 20 basis points sequentially, 30 basis points year on year, which is pretty resilient actually, especially because they absorbed the rest of the compensation hikes, higher variable pay, and invested more in sales and marketing.
So they soaked up costs without a big margin hit.
Pretty much. Speaks to strong operational discipline. Utilization, including trainees, also got better, which helps the bottom line, and their focus on cash flow. Still relentless. Free cash flow, $884 million. That's 109% of net profit.
109%?
Yep. And this is the 5th straight quarter where free cash flow was over 100% of net profit. Just shows incredible financial health and efficiency. They actually expect this trend to continue for the whole fiscal year.
That's quite a streak.
It is. And overall, consolidated cash equivalents, very healthy, $5.27 billion on the balance sheet.
Okay. And the large deals, always a highlight for Infosys. What trends did we see there?
Absolutely critical indicator for them. And yeah, they kept the momentum going. They booked 28 large deals.
Yep.
Total contract value, TCV, of $3.8 billion.
That's a number.
Very solid. And what's even better, 55% of that was net new business, not just renewals.
That's key.
Definitely. And this included multiple vendor consolidation deals worth over $1 billion combined, including one mega deal with a huge global bank.
$1 billion just from consolidation plays.
Combined, yeah. Shows that trend is really benefiting them. Vertically, 9 deals in communications, 6 in URS, 5 in manufacturing, 4 in financial services. Geographically, America's led with 20 deals, Europe had 6, 2 in the rest of the world. Headcount stayed pretty stable, 323,788. Attrition ticked up just slightly to 14.4%.
Got it. Beyond those big picture financials, any other sort of granular details about their financial health or operational shifts that caught your eye?
Yeah, just looking at the nuts and bolts of profitability, effective tax rate for the quarter was 28.9%. They expend 29% to 30% for the full year. And when you break down the margins, they're pretty transparent. Headwinds from comp increases hit them for a full percentage point. Sales investment, another 0.2.
Okay, so 1.2 points of pressure there.
Right, but they largely offset that. Tailwinds from better realization that Project Maximus effect again and seasonality helped by 0.7 point. Lower amortization costs added 0.4, reduced third-party costs another 0.2. So you can really see how actively they're pulling different levers to manage the costs and revenue.
That's a helpful breakdown. Okay, so we've seen the numbers, the strategy. But how does Infosys see the road ahead? This global landscape is still shifting, right? What did management say during the Q&A about the future, about the broader investment picture?
Right. That's where you get the real color. And the message was clear. While Q1 was strong, the business environment is still profoundly uncertain. Unresolved tariffs, geopolitical stuff. It's all still out there. So clients, still pretty cautious with discretionary spending. That means decisions get delayed, deal cycles get longer.
Still seeing that caution.
Yeah, and that persistent uncertainty. That's the main reason they didn't raise the upper end of their guidance more. They basically said they haven't seen the environment improve as much as they'd hoped for in their higher end scenario. It's a very pragmatic view.
So how are they navigating that caution? Especially with AI seemingly everywhere now. How does that fit in?
Well, there's huge interest, they said, in their enterprise AI solutions, those agents, the platforms they offer, because clients desperately need productivity gains, new ways of doing business more efficiently, and it's leading to this interesting trend, budget reallocation.
Budget reallocation. How so?
Discretionary spending, especially on new tech projects, is increasingly expected to be, quote, self-funded through AI-led productivity benefits.
Ah, okay. So clients are saying, show me the savings from AI first.
Exactly. And then I'll use those savings to pay for more transformation. So Infosys is seeing really strong commitment for these specific AI-first outsourcing and transformation deals.
That self-funding idea is fascinating. Makes sense in a cautious environment. And what about vendor consolidation? Still a big theme.
Oh, absolutely. Continues to be significant. And Infosys is clearly benefiting. Their strengths in delivery, their proven AI innovation, those are key factors. They're winning these big multi-service deals against both large competitors and smaller ones too. Shows their ability to scale, offer the whole package. It really highlights that client desire to work with fewer, more strategic partners.
Right. Now, we also heard about some specific challenges in certain verticals during the call. Which areas are feeling the pressure most?
Yeah, they were open about that. Manufacturing, for example.
Yeah.
Challenges in automotive, industrial parts of Europe, mostly due to decision delays, softer discretionary spend.
Okay.
Retail also saw muted spending. Again, tariff uncertainty, tight budgets. Communications is grappling with growth challenges, higher operational costs, though they did say there's a strong focus there on using AI for 5G monetization down the road.
Future potential there, maybe.
Maybe. And high-tech clients, still cautious. Macro headwinds, geopolitical tensions, leading to budget cuts, paused discretionary programs. So yeah, while some areas are strong, others are definitely feeling the pinch more.
And Europe, you mentioned it was a standout performer. Is that sustainable, that kind of outperformance?
That's a key question. Their view is that Europe's consistent strength over multiple quarters comes directly from their early strategic investments there, plus success winning those large, even mega deals in the region.
So it's structural, not just luck.
That's the argument. They believe there are still significant opportunities in Europe, driven by that ongoing consolidation and just the market generally opening up more to outsourcing. Now, they didn't give a specific guarantee it would keep outperforming the company average by that much.
Right.
But they did say the pipeline in Europe remains robust, so it seems like a core part of their long-term strategy.
Makes sense. And they mentioned something about unusual seasonality this year, a stronger H1 versus H2. What does that mean for us?
Yeah, it's an interesting point. Unlike some competitors who are maybe hoping for or expecting a stronger second half rebound in the overall market, Infosys is anticipating more normal seasonality for themselves precisely because their Q1 was so strong.
Okay, so if H1 is strong,
then the usual seasonal patterns, maybe budget cycles, holidays, things like that, would naturally lead to a relatively weaker second half for them compared to the first. It suggests they aren't really banking on some massive market turnaround later in the year to hit their numbers, more steady as she goes.
got it. And finally, any insights on headcount and their delivery model, especially thinking about how AI changes things long term?
Headcount was pretty flat this quarter, as we noted. Their growth was supported more by getting better utilization out of existing staff and those pricing gains from Project Maximus. They didn't make any short-term predictions on headcount trends, but did acknowledge, future volume growth will require adding more people eventually. As for the delivery model, they don't expect some rapid, drastic shift just because of AI in the next year or so, however, longer term. They absolutely see AI enabling new pricing models. Things like outcome-based contracts, maybe studio-based contracts, moving beyond just selling hours. So it signals a gradual, but potentially significant evolution in how they deliver value and get paid for it.
Okay, we've dug through the numbers, the strategy, management's view. Before we wrap, let's shift gears slightly. Time for our This Is Not Financial Advice segment, where we push the envelope a bit based on what we've heard. Remember, purely for a thought-provoking discussion.
Right. Definitely not recommendations. But okay, given Infosys's clear leadership in enterprise AI, that really strong free cash flow, their ability to grab those big consolidation deals even now, here's a plausible, maybe slightly audacious idea. The AI efficiency arbitrage pair trade.
Okay, intriguing name. How does it work?
The idea is you go long Infosys, but at the same time, you short a basket of, say, smaller, less differentiated IT services firms. Or maybe even some legacy software providers who haven't really shown a clear AI monetization strategy yet.
So long the leader, short the potential laggards.
Exactly. The thesis is In this cost-conscious, uncertain world, clients will increasingly consolidate spending with proven partners like Infosys. Partners who can deliver those tangible AI-driven productivity gains we talked about, effectively self-funding new tech spend through cost savings.
Right, using AI savings to pay for more AI.
Precisely. This lets Infosys keep winning big deals, maintain strong cash flows, while the less adaptable players, they could face margin pressure, reduce deal flow, as those discretionary budgets shift decisively towards AI efficiency projects. It's basically a bet on strategic clarity and execution winning out in a really turbulent market.
Interesting concept, the AI efficiency arbitrage. Food for thought, definitely. All right, that wraps up our deep dive into Infosys' Q1 FY26 earnings call. We've hit the strong revenue growth, those impressive large deal wins driven by AI leadership and vendor consolidation, and that consistent, powerful free cash flow generation, all while, navigating a pretty tricky global environment.
Yeah, it's clear their strategic focus on enterprise AI, and maybe more importantly, their ability to translate that into actual productivity benefits for clients. That's a key differentiator right now. They're not just talking the AI talk, they seem to be walking the walk, showing how it delivers real business outcomes.
Absolutely. And again, please remember, nothing we discussed here constitutes financial advice, not the trade idea, not anything else. Our goal is just to equip you with the insights to form your own informed opinions. So, what aspect of Infosys' performance or their outlook stands out most to you? We encourage you to keep digging into these topics. Until next time, stay well informed.